All right, MYB, we are here, episode number 268 of the Minding Your Business podcast, entrepreneurship, real estate, trending news. There's no business like minding your own. I took a little bit of a break for a while. It felt good. So I appreciate everybody's social media posts and tags, and those of you that reached out on email and that sort of thing. Checking out some of the past episodes while I took a little bit of a break. If you're watching this on YouTube or whatnot, you can see I've got a ton of stuff behind me, some boxes and things like that, moving some stuff around, getting some stuff cleaned out as we were heading into the summer and getting ready for all of that and all the fun that comes with that. My girls are home now. They're out of school. And so we're getting some stuff moved out to make some space with that. You always have to make way for the kids, definitely for sure. Subscribe to the podcast, 5-star, wherever you get your pods. That helps us to continue to grow the MYB or the Minding Your Business community. And of course, you can always check me out at champronbrooks.com, champronbrooks.com. Don't forget, connect with me on Clubhouse. If you're on the Clubhouse app, I am in there. I'm in a lot of the various real estate rooms. Recently was able to connect in Houston, Texas. Shout out to Houston, Texas. I was able to connect and meet a lot of the people from the Clubhouse app, where we have a lot of drop-in audio conversation, a lot of insight, a lot of gems dropped, a lot of relationships have been established, and a lot of those were solidified by the opportunity to meet face-to-face, which felt good after all of our quarantine glory that we've had here over the last say 16 to 18 months in some cases. So things are starting to open back up. That's definitely a good thing. And then I hope that as you're listening to this is finding you in good spirits and good health and good mindset. I'm excited about today's guest joining us. Daniel Johnson joins us from Winston Salem, North Carolina, the principal of Refocus. And I want you to check out, as you're listening to this, make sure you go to refocusfp.com. It's there in the show notes. Go to refocusfp.com so that you can follow along and learn more about what we're going to have a conversation today about. But Daniel, thank you so much, my friend, for joining us today. I really appreciate it.
Thanks so much. I'm really glad to be here. Really excited about our conversation.
Yeah, absolutely. We've got a lot to get into because you've certainly done a lot and continue to do a good bit, I'm sure, as we've gone through the pandemic, and looks like we've kind of gone through a little bit of the eye of the storm, and maybe we're starting to get towards the other side. But let's go back a little bit. Daniel, for those that aren't familiar with you, tell us a little bit about yourself and kind of your journey to get to where you are today.
Sure. Yeah, thanks. I going back to the last financial crisis that we had in 2009 or so. That was really actually when I first got my start in real estate. Bought my first property actually back in 2007. So intended it to be a rental property in the long run, but of course the very beginning kind of got punched in the gut with the housing crisis and everything just kind of collapsing around me. So, it was one of those, was a very, very good learning experience of just figuring out how to just, get through it, push through it, make sure that all the bills got paid, make sure that it stayed, at least afloat. And fortunately I still own that property today, and it's a great rental property, but that's when I first, kind of got my start and kind of got my first learning my chops in the very beginning of the financial crisis. So
yeah, absolutely. I can echo that. I started around the same time, Daniel. Bought my first, I originally bought my first as far as property for me to live in prior to this, but in 2007 is when I bought my first rental property. I didn't fare as well as you did. I still don't have it today. I took the hit like many did, and had to give those those properties up. But definitely, when you mentioned the learning piece of that, it definitely was a school of hard knocks type of program. Certainly, and the tuition was high. but did graduate from that for sure, as many did, and here as you fast forward, it's interesting as you fast forward 11 and 12 years, how the I call it the ghost of '08 that still is spooking investors and the market out there as I talk, and even as we're going through what many have described as a really extreme sellers market. Is interesting how on the investor side, that ghost is still kind of floating around through there, and again spooks some people from time to time. So, as you went through that process, though, Daniel, of getting into real estate investing, and you've continued to do it, and now you're still in it. Where does kind of certified financial planning come into place with that? Because I think that's an interesting connection in your story, that's unique, unlike most investors, right? In terms of going down that space and down that road. So kind of unpack that a little bit for us.
Yeah, absolutely. So I was actually at that time I was in banking. So
Ah,
I was buying my first, real estate, my first investment property, was also in banking. So starting to help people and understanding, the kind of the situation that they were in, trying to help them dig out of this hole and trying to figure out how to keep their properties and work out loans and all that good stuff. I was at that time doing all of that. So,
yeah,
it was one of those things. It felt like a little bit of a missed opportunity because I would have loved to have been in there trying to buy more properties at that time. But I learned a lot about just people's personal financial situations by being on the bank side and trying to help them, make the best out of their terrible situations. And I stayed in that role until about 2012, but kind of got a little bit of a taste of working on kind of financial advice side of the world, instead of the writing loans and car loans and that sort of thing, being
yeah,
on the advice side. And so that led me to take the CFP exam, Certified Financial Planning exam. And after that, I joined a large kind of established financial planning company in Asheville, North Carolina, in Western North Carolina. So
awesome.
so lived over there, and I did that for about 7 years, while at the same time I was doing a lot of real estate investing, on my own. So I was working as a financial planner, kind of doing the normal stocks, bonds, just trying to help people allocate their IRAs and Roth IRAs and stuff like that.
Sure.
All the same while I was heavily investing in real estate. And in the very most recent, within since basically the beginning of the year, I kind of changed my focus and I said, hey, look, I really want to start working with real estate investors. And the reason being is I just saw this, this absence of really good, advice for real estate investors, at least as far as financial planning advice. You
Yes.
can certainly go online and find a lot of advice for real estate investors, but it's kind of marrying the two, the real estate investing side and having the knowledge to speak to that, and then
Yeah.
also the financial planning side.
Sure. Yep. Absolutely. And so, yeah, again, it's interesting as I was listening to you, Daniel, how our paths really parallel. So I'm a former banker as well. I was a 17-year banker, and actually, as I started real estate investing, was actually concurrent to my banking career, which I transitioned from in 2018 to go kind of full fledged into what I'm doing today. And it's interesting. I was doing a lot of the same things. Now I was more on the administrative side, so I kind of transitioned on the retail kind of business banking end, kind of from kind of relationship manager into more administration as a director, and eventually on the executive side. And what was interesting is when I transitioned out of banking, I was a little bit in limbo. I had the real estate investing business, but it had been more part time and that sort of thing. And I found myself having to manage a different level of time that I had available to me, as I wasn't in bank meetings and all those type of things, and kind of ripping and running around. It took a lot for me to do that, but for you, having that transition into financial planning, you're able to keep that piece of it up while doing your real estate investing. And so, that definitely brings us to, to refocus. And so you were working for a larger organization, a larger outfit, which I imagine allowed you to get, experience, build contacts, all those type of things without having to be concerned about the business side of running the business. You could kind of learn or really build upon, because you had been in banking, so you really weren't learning it. You were just really building upon what you had been doing, just maybe in a little bit different lane. Talk about how Refocus came along. One, I love that name, particularly in this space, and I could really see the connection between the idea of estate planning and the idea of cash flow management, the idea of insurance planning, around what you're doing. And I think you're unique. There are many certified financial planners that, quite frankly, don't really invest much themselves per se. They're very knowledge theoretically, right? I think one of the differentiating pieces for you, and maybe you can speak to this a little bit, is you can speak from a more practical standpoint. One, you've been through the variations in the market, so that's always something that I think leads to being an advisor, right? Is someone who's been through the roller coaster, right? There are people who watch the roller coaster, and then there's people who've been on it,
Right.
like me and you and many people that are listening. And that's a different, it looks scary when you're watching it, right? But that pales in comparison when you're slowly going up and going up and down and around. So that's just my long-winded way of asking you, just to, talk a little bit about that, how Refocus came about. Did you start it, you kind of bootstrap it? Did you have a pot of gold when you started it? What, did you have partners, that sort of thing? Kind of tell us how the evolution of that came.
Yeah, and it's really interesting because you're exactly right. I gained a lot of experience. I gained on the financial planning side, obviously, had a lot of experience in finance, but very specifically in financial planning and how to instruct clients and how to give guidance and really wise, sage advice, and building good financial plans and that sort of thing. So that was a backbone of it. One thing that it's probably not talked a lot about. So Refocus is a fee only financial planning company, which means that the only way that I get paid is by my clients. I don't accept any commissions or anything like that. So
Yeah.
it puts me on the same side of the table as my clients. But even further than that, the way that most advisory companies work is that they work with an assets under management fee schedule, which means that
Yeah.
they get paid based on how much money you have invested with them. And
Yes.
so one thing that I found is that, and I think it's a very fine and good approach, but for those that have real estate, that want to have more real estate, that are very involved in real estate, it can be a little bit of a conflict point, because a lot of times the financial planner, the financial advisor is kind of gunning for them to sell a property and to move the proceeds, the sale of the property under their management, so that they can increase the amount of money that they're managing for the individuals.
Sure.
So in looking at that and saying, you know what, that's a little bit of a conflict of interest if you're working with real estate investors. I
Sure.
decided to set up my firm as a different way. And so I just charge a flat fee. It doesn't matter how much money you have. It doesn't matter what your investments look like. It's just a flat fee. And it does, so I try to take out all the conflicts that exist in that way.
Yeah, no, absolutely. No, I think that's tremendous. Our guest today, Daniel Johnson with RE Focus. That's refocusfp.com. And I was going to ask you about that, from the fee, kind of that fee only kind of piece, and how that allows you to be, like you say, shoulder to shoulder with the client, because now there's not an opportunity for you to be influenced, quite frankly, by the dollar amount, right? And then kind of stack ranking your clientele based on how much they're investing in you. So that's one of the downsides of, I think, the industry. And then I'll say this, Daniel, is particularly for those of Black and Brown communities, because that trust level and that feeling that they're important to whoever's advising them, no matter how much or how little money they have. I think that's something that I've come across when I've talked with people, when they talk about this particular industry. And it's all built on trust and confidence, just like real estate, just like virtually all business, right?
Yeah.
And all human interaction. And so I love, quite frankly, I love that model. You know, as you developed it. So did you start RE Focus on your own, or did you have kind of other financial planners with you and that sort of thing when you started?
Yeah. So I just stepped out completely on my own.
Oh
There's
wow.
a there's an organization called XY Planning Network, that is kind of a community, and they provide a lot of like support as far as startup and compliance, and all
Yeah.
these big pieces that you have to have when you're starting a financial advisory firm. But yeah, unfortunately I didn't have a big pot of cash to kind of work off of. I was
Right.
fortunate that I've got some real estate built up that of course is going to provide some cash flow to the bank. But yeah, no, it was bootstrapped. It's just every day, just getting out there and talking with folks, and trying to let them know what's available, and that there are alternatives to the Morgan Stanleys, to the Edward Joneses and those folks. That there are other options out there that might be better suited for them considering their circumstances.
Yeah, absolutely, Daniel. And did you run into kind of mental roadblocks as you were transitioning from more of a corporate lifestyle to more of a business where, it's maybe not as structured in the beginning? You had to provide your own structure. One of the things that I ran into going into business was the time that I always wanted. um, I had to fill it right. And I had to make sure I filled it with the right activities, the right behaviors, right? Because there was nobody you're your HR structure, right? And so there's nobody that, not say threaten you, but there's nobody that's coming checking on you to say, okay, where are we on this project, or where are we on this? All that is you now.
Yeah.
um you know I there was a period of time where I struggled a bit with that, because the time allowed for other people to come try to fill it, right? Whether it's family, friends, and then for yourself, right? For me, things that you may enjoy, maybe from a hobby standpoint, or things that come up that's like, oh, you know what, it'd be good to go do that. I never really got to do that stuff before. I was always sitting
Right.
in some bank meeting or something like that, right?
Right.
But then before you know it, it's like, okay, well, what did I accomplish today?
Mm-hmm.
Right. And I can't afford to let whole days, or even parts of days go by without doing something that's progressing me towards my goal
Right.
and that sort of thing. So did you run into any of that from just your overall mindset standpoint as you got started?
Yeah. Structuring your day is so important to kind of lay out, your
Right.
goals, what you're planning to accomplish for the day. Of course, things come up. You get phone calls that you don't expect getting. You get emails that you don't expect getting, but you know that they're high priority to get back to. So
Right.
whether it be planning out to write your blog post, to work on your newsletter, to go and follow up and meet with a CPA or an attorney or something like that. All those are extremely important, and you're right. And I think honestly that the challenge for me has really been not letting my work overflow into off hours either, and end up
Yes.
end up
Yes.
working
Yes.
65-hour weeks, whereas previously it was 8:30 to 5, and you called it a day and you go home, right? Like
Right.
work
Right.
working those bank hours, and you just call it a day and you go home, and you whatever's on your desk is going to be there in the morning. You work on it the
Morning.
next day. Yeah.
Right.
So
Yeah.
that's been a challenge as well, as just drawing those boundaries and making sure that you stay inside of that.
Yeah, absolutely. No, that's just tremendous. And so for you, as the business is picking up steam, and you're moving, you're building relationships and things like that. Talk about the services that you provide, Daniel, and understanding that you have a niche, kind of target towards real estate investors. What is it that you specifically help them with? And when they come to you, what's kind of common issues that you tend to see, just across the board that they bring that you're able to help either mitigate or resolve?
Mm. Yeah, so for real estate investors, one of the biggest issues across the board is taxes, and
Sure.
just understanding and doing proactive tax planning. Where there's a lot of great CPAs. I'm not going to put down CPAs. They do great work, but many times they wear a compliance hat. They wear the preparing of the tax return and signing it, and then once they're done with that, they're like, okay, see you next year.
Yeah.
And
Right.
there's no proactive tax planning, or there in a lot of cases there are not. So many times that is one of the highest priority and highest ROI investments that I can work with folks on is looking at their tax situation, figuring
Sure.
out if there's opportunities for depreciation, accelerated depreciation, looking at contributions to retirement plans that may be beneficial,
Yeah.
leveraging other assets that may be beneficial. So so the tax piece is big. Obviously, cash flow management is a big one. Figuring out what's coming, what's going, and figuring out how to make sure that there's enough capital for the next project and that sort of thing.
Sure.
Risk management, which is your insurance and estate planning. Those are all big. And then kind of finally is the last one is really the investments, as far as your stocks and bonds. But what's even greater about that is the any opportunities that clients bring, whether it be a syndication deal, whether it be an opportunity to partner, and having, being able to be there and walk through it, take a look at the numbers, kind of being a second set of eyes on any of these opportunities.
Sure.
That's another big thing that I do with my clients.
Yeah, absolutely. So in today's market, obviously, and we talked a little bit about this earlier, Daniel, being kind of described as a really intense seller's market where the prices are continuing to rise. You've got a low interest rate environment in terms of the mortgage side, and there's so much information that floats around now. And some of that information is true and accurate, and then, as we know, some of that information is not so true or is false, that people have. How are you navigating that with your real estate investors who are, as they're looking at deals? Do you help them in looking at deals from that side of the tax piece of it, particularly around exit strategy? I imagine whether they're
Mm-hmm.
looking to BRRRR, which is
Mm-hmm.
for everybody listening, that's the buy and rehab, rent, refinance, and then repeat. Some are flippers, some wholesalers, some are kind of into multifamily and things like that, like you mentioned, syndications. And so how are you helping them kind of navigate that through this current environment?
Yeah, so I mean, one of those a couple of big pieces of that is if they're actively involved and engaged, and it's their full time job, it's a lot easier to navigate tax issues. It's whenever you're a passive investor and trying to take advantage of accelerated depreciation opportunities and that sort of thing, and of course, if your income's too high, so there's just a lot of little pieces to put together in order to understand what the tax impact. Because the thing is, a sponsor, a syndicator can say, oh well, we're anticipating you're going to get X dollars in accelerated depreciation this year. But
Yeah.
what an investor may not realize is if they're not actively involved and they make too much money, they're going to get capped out and they're not going to be able to deduct any losses. It would of course reduce the amount of income that they have, as associated with real estate, but they may be banking on trying to deduct some losses from their other income, and it may not happen. So,
Yeah.
walking through a lot of those rules and things like that. And the hard thing is it's all very individual. It's individual
Yeah.
based because a syndicator doesn't know what the investor's tax situation looks like, and they're always going to have that disclosure. Make sure you talk to your tax advisor about this particular situation. So that person, that advisor that can look at their situation and give advice around it is really quite helpful to a lot of my clients.
Yep, absolutely. No, makes total sense, Daniel. To say the least. And so, you know, uh, as we go forward, and we were talking, kind of a little bit, even offline about, this current kind of pandemic environment, and as markets evolve, and you and I have been through those market cycles. What do you anticipate for investors as the market does start to evolve, and how do you, quite frankly, still service that advisor as those changes are occurring, and maybe investors are coming to you with a new set of opportunities, a new set of problems, a new set of everything, right, as it evolves. What do you do to kind of stay abreast of the news and things like that, so that you can best advise them on actions to take, or actions to not take?
Yeah. Yeah, I think you kind of referred to it earlier. I think one big thing is we're in a generational cycle right now where we have a lot of baby boomer investors that
Sure.
have been investing for the last 30, 40 years. And they've got significant capital gains. They've got great assets that have been cash flowing them really, really well for a long time.
Yeah.
However, we're coming into a period of time where on the tax front, things may start to get more and more challenging for folks as they're looking at what the tax situation for them might look like in 2 or 3 years.
Sure.
So some of my advice really is looking at whether it might be time to sell a couple properties and not 1031. Just go ahead and cut it loose, pay your taxes, and be able to diversify your portfolio a little bit more.
Yeah.
Of course, every situation is different, but on the other side, for younger investors, you know what? You and I, we bought our properties in 2007, and that time period. And although a lot of properties lost 40, 50% of their value over the next 3 years, 4 years, me personally, I know my property is now up at least 50% from the price I had purchased it at. So,
Right. Exactly.
so even if you, and the one great thing is that real estate is really a very forgiving, for the most part, a very forgiving business.
Very true.
If you screw up and you end up with a terrible property that doesn't make you any money, chances are you can hold on to it for another 3, 4, 5 years and get out of it and not lose your shirt on it.
Right.
So my advice for younger investors, those that are out there looking right now, I know prices are expensive, cap rates are compressed, interest rates are low, lots of competition, but I think if you hustle and you can find deals, there's always a deal somewhere. Find a good deal. Find something that needs a little bit of elbow grease, needs some work. Put a little bit of sweat equity into it, and then maybe you flip it, maybe you burr it, maybe you hold on to it, and just rent it and lock in that interest rate. You know what? I have a hard time thinking that in 20, 30 years you're not going to be appreciative that you did that. I think you will find that it would be a great success, even though it feels like things are really expensive right now, and that rents are so low compared to what your prices are. If you can scratch it out and make it work, I think you go with it. I think you try to push forward.
Yeah. One of my old coaches used to say, "Good things happen to those who hustle." And so that's exactly what you're talking about there for sure, Daniel. So thank you for that. Do you work with any wholesalers, those in the real estate market that are coming across those great deals? I do some of that myself, and many that are listening. That's one of the really solid entryways into real estate for many, and it's become way more popular since those 07, 08, 09 days, with the advent of YouTube and all the different coaching platforms and trainings and things like that for people to be able to get into real estate. Do you work with any of those folks? And If so, how do you help kind of advise and guide them as they're earning, more like assignment fees? So they're more getting properties under contract with the seller that's maybe in a more of a distressed situation, or the property's in a distressed situation, and they're able to assign that contract to a cash-in buyer and earn a fee spread in the middle there. How do you work and advise those folks?
Yeah, I personally don't have any wholesalers that are clients, but there are still a lot of things on the tax side that can be done to work to minimize to the extent that you can. You're basically running a business. You've got those you're earning the spread, and
Sure.
it's pretty much like a commission, and there are still some things that you can do, forming up your entities properly, and setting up some retirement accounts that you might be able to sock a little bit of cash away, save some taxes on that end. Of course, maximizing your deductions, you're driving for dollars, make sure you get your mileage in, all those good things
Absolutely.
that as you're looking at it. But I personally don't work with any wholesalers at the moment, but certainly it's a place that I'd be happy to be of assistance to anyone that's in that place.
Yep, absolutely. No, makes total sense. Makes total sense, Daniel. So, as we kind of wrap up, and I've got dogs going crazy here, but as we kind of wrap up, what are just kind of one or two areas that have worked well for you in business, that you think will help others? Regardless of the industry, what are one or two things that have really worked well for you that you think will work for others?
Yeah, I mean, I think the one of the biggest things is relationships. Relationships over everything. Just being there for other people, being that being a voice of encouragement to other people around you. Being able to just know, hey, look, just tell somebody, hey, I'm here for you if you need me, if you need a mentor, if you need some help, I'm here for you. And then asking for help on the other end, from folks that are ahead of you, and figuring out how you can help them, how you can engage with them, and not expecting to get something, but just knowing that if you're helping somebody and you're adding value to their life, it's probably going to end up resulting in some good outcomes for you.
Yeah, pay it forward. That's what it's about. As you learn and as you grow, if you can help others to be able to do the same, it just goes so much further, and so much opportunity comes from that. Personally and professionally. And so, Daniel, this has been tremendous. I want to encourage everybody. refocusfp.com is where you need to go. You can learn more about Daniel and his organization, and definitely get tapped in. And if you're a real estate investor and you're looking for a really strong certified planner, an advisor, someone who's actually in the industry himself and is investing in real estate, really look no further than Daniel Johnson. It's a great way to ensure that you're in the right place, and it's always good to have advisors in your real estate business or whatever business that you're in. If you try to fly it solo, it's just really tough. And trust me, I know. You got to have knowledgeable people who understand the industry, can understand your business, and can guide you in the right way that you should go. So, Daniel, thanks for what you do in the industry. As someone that's in real estate, definitely appreciate what you do. Look to remain connected, and I thank you so much for taking time to be here on episode 268 of the Minding Your Business podcast.
Thanks, Champ Ron. It was great to be here with you as well, and looking forward to that great big the nice weekend we got ahead of us, right?
Yeah. Yep, that's right. Yeah, we're looking forward to a long weekend, and I'm taking actually family to Disney
Awesome.
here this next week. So looking forward to that, and having a good time with family and that sort of thing. So listen, Daniel, thank you so much, and we definitely will talk again. We need to do a part two where we, maybe dive into maybe some mock, kind of situations that we think we can help people practically, and that sort of thing. So I'd love to be able to do that. And best wishes to you and your family.
Thank you. Have a great one.
Yep. Excellent. Daniel Johnson's our guest today with RE Focus. Again, in the show notes, make sure you go to refocusfp.com. That's where you need to go. Make sure you connect there. You can reach out and let Daniel know that you heard him right here on the Minding Your Business podcast. Listen, we're going to get out of here, folks. Remember, there's 3 things that unite us all. We all want to be a little bit better for ourselves, a little bit better for our families, and a little bit better for our communities. And if we can do all that, and remember that with everybody that we interact with, we will all make this place just a little bit better. Champ on the Minding Your Business podcast.